Good afternoon, everyone. We have an amazing agenda for everyone today. We are going to start the first half of the webinar with amazing piece of research presented by Marisa at ReMark Research. And it's going to cover the state of Gen Z and millennials for financial health, supporting their desires to learn, and lots of data and really amazing engagement segment for that. We hope that you have your cell phones available because we'll be using a live polling option to test your knowledge and also invigorate some of the learning, personalized learning, to really kind of show you, not just tell you what the research is saying. So super pumped for that, Marisa. And then at the half past the hour, we will start our fireside chat with our amazing esteemed panel, Pia, Michael, and also with Marisa. I will be moderating as your host. I'm Jane from Optimity. So a couple of webinar tips just for housekeeping. All the guest lines are muted to avoid background noise, but you can engage. So type in your questions during the Q&A icon. It's at the bottom of your screen, and we will be able to answer them in the Q&A period at the end. The slides that we'll be sharing and the webinar recording will be sent following the session to your emails as well. A little bit about your host, Optimity. We're an award-winning total health and wellness technology platform. We're powering programs for about 7 million members globally. We have a very holistic approach to health. This is physical, nutrition, mental health, social connectedness, and today's topic, financial health. We are all about mission, and our mission is really help to drive community and build it while generating amazing proprietary data, dynamic understanding around key life events, and to be able to service billions of people around the world. And right now we're working with over 100 clients in health and financial sector. So we're really at the intersection of health and fintech, serving millions of members and generating billions of data points to be able to create this beautiful user experience that is quite tailored to each individual along all 5 pillars. The actionable insights captured is also something that we're very proud of. So on today, when we go through all the data, I would prompt you and nudge you to think about how can you use this information for the benefit of the user, but also to drive corporate value. So with that background, it's really natural for me to introduce engagement and also my partner here today to talk about what the data is saying globally around financial health and the engagement around it. So Marisa, I'm going to pass the screen over to you for you to share your presentation.
Thank you, Jane, and the Optimity team for inviting me for today's session. We're going to jump right in and get my presentation going here. So welcome, everyone. As Jane mentioned, today we're going to be talking about Gen Z and Millennials and their path towards financial wellness. I work for ReMark, Score Digital Solutions. It's a division of Score Reinsurance. And we are a global consultancy that's focused on insurance, marketing, technology, and insights. And I'm really excited today to be sharing results of our global consumer study. As Jane mentioned, we're going to be doing things a little bit different. I would like for it to be engaging. So we'll be using Slido. Shortly, I'll be asking you to take out your phones to scan the QR code and participate. But we're going to be doing things a little bit different to ultimately test who in the group is most knowledgeable about this consumer group. Now, before we get into the results of the study, just wanted to give you a little bit of background. This is our 10th year publishing the study. And we've chosen to invest in this not only to help our organization, but our partners in better understanding the needs of consumers and also helping to design products and solutions for them. It's one of the largest global studies around insurance, and we do also touch on broader financial services as well. The study examines a variety of topics. Today, we'll be talking about financial wellness, but we also dig deeper into insurance, the experience, health and wellness, technology, and more. Our study does cover 22 markets, and over 12,000 consumers participated in the most recent one. Today, we'll be focusing on the US, but from time to time, I will reference trends that we're seeing globally when it comes to developed and developing nations. Furthermore, as I mentioned, this year's study focused entirely on Gen Z and Millennials. However, our historical data has looked at the broader generations, and I will reference some of that as we go through the trends. Now, before I get into the tactics and methods that we can use as an industry to engage this population, I think it's important first to set the stage and explain a little bit about the state of Gen Z and Millennials. Now, you may find it interesting that I'm kicking things off focused on mental health, but this is an area that more and more we're starting to focus on, and you'll see a bit more why as we dig deeper into these insights. This here is a heat map showing stress levels globally for Gen Z and Millennials. As you can see, the US is at the top range in terms of self-reported stress levels, with over 55% of them stating that they're always or often stressed. This is a trend that we're seeing increase each year. Interestingly, during the pandemic, we saw a decline in the US on self-reported stress levels. But since then, as we've returned back to normalcy, we've seen those rates continue to increase year over year. And as you can see here, compared to 2022, we had a pretty significant increase. More than half of them are reporting that they're always or often stressed. Now it's time to start to engage you all. So I recommend if you would like to participate, please go ahead and take out your phones. We're going to kick things off with Slido here. If you're not familiar with Slido, take a moment to scan the QR code. It's going to simply ask you to input your name. And let's start to see some of the participants here. Great. Nice to see everyone. And you can make up a name. It doesn't have to be your own. So as you all are joining, our first question is going to be around the causes of stress that we're seeing in the United States. What I love is, historically in our study, we looked a lot at health and wellness from a physical perspective. And as I mentioned, most recently, we started adding in mental health as well. We're not going to touch on it today, but we also explore the impact social media is having on the state of mental health of these consumers. At the end, I'll give you a link to the full study, but I do recommend checking that piece out because it's quite interesting. All right, everyone, we're going to go ahead and jump right in. So question number 1, what is a leading cause of stress in the US? Financial issues, work, education, uncertain future, family, relationship issues. Give you a couple more seconds to jump in. And time is a factor in this. The faster you respond, the greater chances of points you will have. All right, well, we have a pretty educated group here with 92% selecting the correct answer of financial issues. Now, this particular question asked them to pick this top number 1 stressor. And financial issues is at the very top, with a third of them saying it's their most stressful aspect of their life. Uncertain future is at 18%, work and education at 16%, and family and relationship issues at 15%. We also saw some differences across the 2 generations, which a lot of it makes sense. Uncertain future was a bit higher for Gen Z. A lot of them are at the state in their life where they're entering college, considering their careers, whereas for millennials, family and relationship issues was slightly higher. Similarly, different life stage, settling down, having a family, all those sorts of things. Now, why I decided to focus on this and include it in today's session is I feel that this is a huge opportunity for our industry. With a third of them stating that financial issues is a major stressor, this is a place we can play a role in their lives. So let's further get into the state of them in terms of their future and their finances. Did a little research outside of our study around retirement and their views on retirement. And there's been some trends within these generations, and that a large percentage of them are saying they aspire and they plan to retire early. What's interesting about that is despite that aspiration, not many are actually on the path to doing so. And here in our study, we asked them specifically about the types of retirement savings they have. A third of them have stated that they have no savings at this point. And you can see there is a difference between Gen Z and millennials. I think it makes sense that millennials tend to be a little further in their planning process than Gen Z, but there are differences in how they're doing so. So for example, Gen Z putting savings into their bank account, whereas millennials more heavily may be relying on their employer, which once again, I think relates to their stage in life, where maybe some Gen Z aren't yet in their career, they're in college or ahead of college and putting money into savings. So once again, here's an opportunity for us to play a role. I'm not sure entirely why there is a gap in terms of their aspirations and their actual efforts, but we have a chance to play a role in helping to educate them in this process. Our study also explores financial literacy and does a deeper dive into insurance literacy. And we do this on two fronts. We look at it from a perceived perspective and an assessed perspective. So right here, these are self-reported levels of comfort when it comes to each of these financial service products. All in all, you'll see a trend. More simplistic products, they seem to be much more confident in their knowledge. Things deemed more complex, like pensions, or things that they have less experience in, maybe investments, they cite less knowledge in those areas. From an insurance perspective, they're fairly even between life and health and home and motor insurance. And across the age groups, what we tend to see is higher confidence rates in younger people and lower confidence rates in elders. So when I look at past studies, when we included the other demographic age groups, they tend to report less confidence than the youthful counterparts. I think a lot of this has to do with experience, and that maybe a lot of elders have experience in these products and understand the complexities within them. So our study also looked at this from an assessed perspective. The participants were given a short quiz, 10 questions, to assess their insurance knowledge. This was across life and health as well as home and motor insurance. And this is another opportunity for you all to participate. So if you haven't already joined, you have an opportunity to do so, but we're going to jump into the next question. In terms of insurance literacy, what did US Gen Z and millennial participants score out of 10? 8, 7, 6, or 5? You guys were spot on with the last one. Curious to see how spot on you are for this. All right, we're a little more evenly spread out for this one. And the correct answer was in fact 6. And then this shows the breakdown between the different demographic groups. As I mentioned, with age comes knowledge. So Gen Z are slightly lower than millennials. I also included the US compared to other global established countries. And you'll see that we're right on average with our peers globally. I will say when you look at more developing nations, they tend to have lower literacy rates. So there's a trend in terms of developed versus developing nations, as well as age, and with age comes knowledge. So next question is, all right, well, what does this mean to us? We see that there's a gap in their knowledge. They have aspirations to retire early. How can we play a role in this? And the great thing is that nearly 70% of them express a desire for more insurance education. This is a huge opportunity for us. They're wanting to learn, and they're willing to engage with us to do so. So now let's talk a bit about the ways and methods we can use to help them learn more about their financial products and solutions. We'll start this off with yet another question. So in terms of learning in the US, what is their most preferred way to learn about insurance? Online courses, one-to-one agent call, friends and family, or watching a video? This one often trips people up a bit. All right, once again, we're almost evenly split across them. The actual answer is online course at 25%. But those of you that selected the other options, you're not that far behind because they were all very close. So as you can see here, they only were able to select one. I intentionally showed the wide range of options. Online course was at 25%, one-to-one agent call at nearly 22%, friends and family 21%. You'll see throughout the entire experience, friends and family play a big role in their decision making. Videos at 11%, and then you'll see some of the more traditional, less engaging methods like reading a brochure, email newsletters, online forums falling far behind. One outlier that's a bit surprising to me, but I think this is an emerging trend, is around social media, with only 3% stating that this is a preferred method. I did some secondary research on this and came across some recent publications. Forbes had an article specifically around social media and the role it's playing in financial literacy. And they stated that 79% of Americans representing millennials or Gen Z have stated they've gotten financial advice from social media. And that 76 believe that financial content on social media has made it less taboo to talk about money. So there's some evolving and emerging trends we're seeing within some of these channels. I think it's important to note that this question was specific around their most preferred method, but there are a variety of things that you can do. I don't think you should rely solely on one channel, that you should have a mix of channels and also look at it from an entertainment perspective. This needs to be what I would call edutainment. You know, a lot of times when it comes to financial services, we think this is a very serious category that we need to take it seriously. But the reality is the way in which people consume content, whether it is on a personal entertainment perspective versus more educational, is quite similar. Short form, entertaining ways of learning is their preference. All right, we're going to jump into yet another question. Here we go. Who do they go to for insurance purchase advice? Their insurance agent, friends or family members, the internet, or their employer. So at this point in the process, they express interest in learning, they've done some research, and they're ready to buy. Who do they go to for advice? All right. Great job, everyone. We're at 50%. That is correct. Friends and family members. And we'll take a quick check here on performance. Drew is number 1 with 3 of the 4 questions correct. So great job. We're going to continue on here. So for this question, they had the option of multi-selection. So that's why things do not add up to 100. And I think this is important that they all are quite similar. They're all over 40% here. The reality is they use a mixture of sources to help with their advice. So they may go to a friends and family member, but at the same time, they may also research online, or they'll talk to an agent and then secondarily research online. All 3 are great importance, and they each play an important role. All right. So we've talked about they're interested in learning, who they go to for advice, and they're at the point in their process where they're ready to buy. So here's our next question for you. Aside from price, because we know price is still important, what is the most important factor when purchasing insurance? Good online reviews, established brand name, diverse product range, quick purchase process. Wow, I'm impressed. 56% chose good online reviews, and you are correct. So for this one, I chose to show all the options. Once again, this is a question where they were only able to select one. This is their most important feature. It doesn't mean that each of these things aren't as important. It's just that we had them choose one. So as you can see, price is right up there at the top with good online reviews. This is a new insight for us in this most recent study. We've seen this increasing in importance over the last few years, and this is especially important with younger consumers. Now, why I say you should consider all the other factors, the reality is good online reviews encompasses a lot of these other aspects. Good online reviews are going to talk about the purchase process. They're going to talk about the claims process. They're probably going to talk about price. So all those things actually do kind of fall under good online reviews. I think it's also important to call out brand name. Yes, brand name is important. It gets you in the door, right? It opens up a conversation with them. But at the end of the day, if your online reviews are not up to par, it's going to override your established brand name. On the flip side, if you're a lesser known name, there's an opportunity for you to stand out if you do have fantastic reviews. Now, some of these things were a little bit different when we looked at the different generations. Younger consumers were slightly more price sensitive, whereas millennials were a little more heavily focused on brand name. So there were some differences here. Now we're going to get a little bit further into how we can support this need and desire for education. It doesn't matter what industry you're in, there's a growing demand for a personalized experience, whether it be personalized products, messaging, and just overall experience. And insurance and financial services, these are not outliers. This is still an expectation for our industry and incredibly important for younger consumers. Now, in order to do so, data is an important piece of this process. And lucky enough, younger consumers understand that in order to have a personalized experience, that there is a give and take that's required, and data is a necessity in this. So let's jump into another question. What type of data are they most comfortable sharing with their insurer? Previous claim history, employment information, health checkup data, or financial information? Spot on. This group seems to know these consumers. So employment information was correct. And for this one, I normally would not show so much data on the slide, but I think it's helpful just to see across the board, they are very comfortable sharing their data. And actually, Americans compared to other countries globally, Americans are much more willing and likely to share their data. They're not as sensitive when it comes to data sharing. At the very top, you've seen employment information is the number one, previous claim history is secondary to that, and health checkup data. We have a few things in the middle, but I wanted to call out the few on the other end where you see wearable data and telematics data. I think the reason why these are more on the lower end of the spectrum has to do with more about the availability of the equipment, or really understanding the need for that type of data, because it's a little bit more unconventional. When it comes to the traditional application process, when it comes to underwriting and insurance, they understand that there's certain data points that they need to share. Now, what's fantastic in all of this is their willingness to share data can be further encouraged when it comes to rewards. So when going back to the give and take of data, they're willing to give if you provide them something in return. And Americans are very sensitive to this and very enticed by such rewards. So you can see 83% find it very attractive to share their data in return for an insurance discount. 74% of return on their investments, free insurance coverage is 72%, and discounts, retail discounts, is 69%. So there's an opportunity here to entice them to share. And I think when you get back to the previous slide, when it came to telematics and wearables and whatnot, that's where a lot of this could play a role in enticing them, because it makes sense in that space. We're now moving on to the final question. So this is your chance to lock your place in. What percentage are open to knowing the risk of getting certain illnesses from their insurer? 52%, 66%, 71%, or 82%? All right, spread out in this one as well. All right, for those of you that select 71.5%, you are correct. And anonymous, you have won. Congratulations, excellent job. It came very close here in the end. They got 5 out of 7 correct and did that in a little over a minute and a half. So I thought this was an important stat to share with everyone. As I mentioned, 72% said they're open and willing to do this. The reason why I chose to highlight this is because the give and take and the reward aspect can go beyond monetary things. Consumers want to be educated. They want to understand their risks and the efforts they can take to mitigate those risks. So you think about, things like DNA testing now. People are, joining 23andMe. They want to learn about themselves. They want to be educated. And when it comes to insurance, we have a process of underwriting and applying for insurance where they provide all their information, they may provide labs, and it kind of goes into a black hole. There's an opportunity there to educate them on their data, tell them more about the condition of their health and things they can do to reduce those risks. So it doesn't always have to be a monetary reward when it comes to data sharing. There's an opportunity there for them to also learn, and we can play a role in that.
I couldn't agree more.
All right, well, that's everything. I think just all in all, there's a need for education. Finances, there's a stress for them. And we have an opportunity to play a role in this process and a role that's authentic to our industry. I think there's times where we're trying to find a place to engage, and there's a need here. It's something that I think fits our industry well for us to be a part of this process. I'm just going to conclude here. If you're interested in the study and want to learn more, there's a lot more in it. Scan to check it out. There's also a dashboard that's interactive where you can filter for different demographics and different information. But we highly recommend that you come and visit it. So thank you.
Super fantastic, Marissa. And I just find myself nodding along the whole time. One, because everything that you're saying is very data-backed and research-based. And then two, I think I'm among the oldest generation of millennials, and it is completely, within our demographic that we need to service this new generation of people. So I wanted to take this time and bring up our beautiful panelist set. And let me first introduce them because I think it's such a diverse group, not only visually, but also in terms of our backgrounds, who we are professionally, but also how we see financial health and wellness in the population. So we'll start with Pia from MassMutual. Why don't we start with a little bit of, I'll let you introduce yourself, your professional self, as well as your perspective and in your work or in your personal on financial health.
Sure. Thanks, Jane. My name is Pia Flanagan. Thank you guys for having me here today. I am head of mass markets at MassMutual. which essentially means that I am in charge of helping us figure out how we can reach, engage, and serve more consumers, specifically those in underserved markets that we currently don't reach today. And I've been with the company for about 11 years now.
My favorite part about what you bring is both your non-insurance experience, your past
I'm a lawyer.
perspective, but also in your current impactful work right now with the underserved populations. So more to come. I've got lots of questions for you. The second person I wanted to introduce is actually one of Marisa's longtime colleague from a previous life, Michael. Super impressive background. The work that Method is doing is also, I feel like it's definitely leading the industry in many ways. So I would love to welcome you and have you introduce yourself and your professional perspective on financial health.
Yeah, thank you for having me, Jane, and Marisa, thanks for sharing as well. So Michael Lewandowski, I lead financial services for Method, which is a digital product consultancy. And really across our financial service clients, from banking to wealth, insurance, and fintech, they're all looking for ways to engage customers on the topic of financial health, whether that's based on demand they're receiving from their customers themselves, or just a desire to increase, their share of wallet. And so at Method, we're really trying to help our clients understand what value means to the end consumer when it comes to financial health, how they prefer to be engaged on those topics, what matters most to them. And we bring that into our approach to developing experiences and products. So looking forward to talking a lot about that, because I think Marisa brought up some really good data points.
Yeah. Marisa, I know we already met you through the beautiful presentation that you did, but I think the part that I also wanted the audience to learn a little bit about is some of the workshops that you have done. I've participated in one in Silicon Valley not long ago, so maybe give us a little bit of an expansion of the type of work that you engage in.
Yeah, so within my role at Score Digital Solutions, I help with digitalization and consumer insights. And throughout the year, I do a lot of events with Plug and Play, which is a startup incubator out of Silicon Valley. And we host a lot of unique things. We most recently did a design thinking event around elders and aging in place. So a lot of what we do is encourage unique ways of thinking that are customer insight led. How can you improve upon your customer experience, whether it's through communications or through better technology. And what I love about our organization is that we have taken the time to invest in understanding consumers and doing this study, because what's crazy is this is a year-long process to publish this. We're starting the process right now for the next one, which we focus more on underwriting and claims and those experiences. But it's not something that we just do in a short period of time. So it's great to work for an organization that understands how important it is to understand the consumers.
Yes. And us being kindred spirits in that, I love nerding out, and I do invite everyone on the call to use the last QR code that you shared, but we'll also share it in the chat for everyone, because getting into that Power BI dashboard and be able to segment on the region, on the cohorts will, I think, produce additional initiatives and impactful programs that would be useful for all. And it's an amazing free resource for everyone here. So let's dive into our first set of questions. There's so much to cover, but I think the first one is, let's talk about the biggest opportunity in properly connecting with Gen Z or millennials from each of your perspective. And I would like to start with you, Pia.
Sure, thanks, Jane. And I'm sorry, this volume keeps going up and down on me. I'm still learning this new technology I'm using here. But no, I think, one of the things that wasn't a point of data from the study is just around the generational transfer that's going to be occurring in the next 20 years, right? And so research shows that there's going to be about $84 trillion worth of wealth that's going to be passing down from baby boomers to Gen Y, Gen X, Gen Z, and millennials. And I think Gen Z and millennials are going to inherit about $38 trillion of that wealth. And so that creates a huge opportunity for all of us companies, all of our companies in the financial services industry, to really start thinking about how can we start engaging with those consumers earlier in their life cycle, right? We all want to try to acquire customers so that we can service them across their lifetime and create more lifetime value for that consumer. And so thinking about what's happening in the economy, thinking about what's trending, where we're going, and thinking about that wealth transfer and how we can leverage that as an opportunity to think about different ways to engage this audience differently. I think that, with millennials and Gen Zers, they are more digital natives. And so thinking about how we can use technology differently to not only reach those individuals, but to support them, to develop solutions that really address their needs, which might be different than the needs of the baby boomer generation and older generations. And so I think it's going to be incumbent upon us to really look at what we've done in the past, look at what has worked in the past, what has not worked, and figure out how we can leverage lessons learned from other industries and other countries to figure out how we can reach and serve this audience much more better than we have today.
Yeah, and some of the key takeaways that I'm seeing in our research is short form edutainment, really making it more joyful, uh, because maybe the boomer generation was open to tolerating some of the more dry and long form type of content. It is just not the case with this generation of people that are pressed for time.
And I think the key word for me that you said is joyful, right? There's so much bad news out there, information that's, looking at the future state of Americans, the future state of Gen Zers. As you mentioned, they want to retire early, but the data suggests that they are not adequately prepared to retire early. And so painting a picture that's not doom and gloom, but one that's full of hope and joy. And I would say that that's probably not something that we as traditional carriers are accustomed to, really being more empathetic, really listening to the consumer, understanding their behaviors, understanding their needs, understanding what drives and motivates them, and really painting a more realistic and hopeful picture, I think, is one way to think about how we approach that education and learning opportunity.
Exactly. There is, attainable things and good methods. So Michael, I'm going to swing back to you in terms of what are the opportunities that you're seeing in your, projects, client projects, and what you see over, like, especially in North America.
Yeah, no, absolutely. Maybe just to connect to what Pia brought up in terms of the signal around generational wealth transfer. One thing that we've engaged with a lot of clients and conversations around, particularly in insurance, is a broader definition of customer. It's not your immediate policyholder, it's their beneficiaries, it's others that are going to be part of your ecosystem when that transfer happens. And so I think when we look at all of that, there's this, kind of where are the moments that matter, where are these opportunities, and really leaning into education, which we've talked about, right? I've seen other stats to reinforce some that Marisa has brought up that, financial literacy doesn't peak until your mid-50s, and then it declines thereafter, that people in their mid-40s are still learning to balance credit card debt. And so you look at that and where people are at in their earning life cycle and how few years there frankly are at that point in time to then put yourself in a position to be financially healthy in retirement. And you say we have to do something to educate these generations to participate in a conversation, whether it's through their potential parent or other policyholders that we may have, or to find different channels, different means, different ways of establishing contact. I think that's really the key. We saw in some research that we did in the UK that 80% of Gen Z said they didn't feel like they had sufficient advice available to them. And reinforcing some of what Marisa said, we saw that those that did use social media, 100% of those who said they didn't trust it fully. And so I think what we see is this opportunity to think across channels and about channel jumping and how behaviors are enabling people to be able to get bits of information from different sources. And how do we help brands insert themselves consistently across that? And not ignore the human touch either, because the human touch is still a preferred channel for building a relationship, as what was seen in the data, one-on-one in terms of working with a financial advisor or insurance agent, and Marisa's data as well.
Yeah, the importance of the family and friends programs, the community, the intergenerational interactions too. I think all of that is kind of a perfect storm for us to really smartly navigate altogether. So Marissa, wanted to talk about, you look at the data quite a bit in the biggest opportunities. If you had a couple of, pearls of wisdom that you can distill from it, what are the top things that you see as big opportunities?
Yeah, I think it's a big opportunity, huge opportunity for us to help to fill this gap. But I will also admit that this is not a simple undertaking. Education, I think you would just simply be wasting your time by writing a few articles. If you really want to truly connect, engage, and educate, you got to think of something bigger, right? It's not single channel, it's multi-channel, it's an entire ecosystem to support the education. It's short form, but also in some cases there could be a need for some longer form content. So it is an investment. I think it would be a mistake to say you should be doing it, it's easy. The reality is I think there's a lot of upside to it. But I think there is, in a way, a right and wrong way to do it. And it does take a commitment to doing it right. But if you do it right, there's a tremendous amount of opportunity. Just talking about, the future and all the wealth that's coming down to these generations. If you do it right, tremendous upside. So.
Yeah, so what I'm hearing is patience and really moving away from the transactional model. And that totally resonates because this group, perhaps they don't have the assets today, and it looks relatively bleak in terms of, overall like home ownership and other sort of financial retirement goals. However, right, these things are coming, and I think even in a lot of experiences that we're designing today, maybe to more of Michael's point, it is omni-channel, but it's designed with years in mind, right? Like it's that concerted effort and that real relationship building that does perhaps bring in human in the loop as well, because in the end, these are, life decisions, these are familiar relationship decisions, these are health decisions. We haven't even touched the surface of, any sort of health crisis. I shared quite a few stories recently on LinkedIn, and just people like a diagnosis or a health scare, it impacts their financial health in a very, very concrete way. So it's relatively hard to achieve wellness without that. So maybe I think I wanted to swing to Pia and Michael to talk about what are the biggest surprises that you saw in Marissa's research. Maybe there's none. So if there isn't any, maybe the pearl of wisdom that you got from there and you said, hey, we need to do more around this.
I think for me, most of the research findings align with what we already knew or what we think we know about millennials and Gen Zers. I think the biggest surprise for me was the social media in terms of where they get their financial education from, because I would have assumed that more rely on social media. And so that was a surprising statistic for me. I do think the silver lining in that, though, was the fact that Marissa indicated that it has encouraged people to be more open about having conversations around financial literacy or just their financial status and financial concepts and ideas. And so I think that's a good thing, right? We are open to having these conversations with friends and family, with others. We're open to learning more. So at least let's put it at the forefront that it's okay to have these conversations. And that there are a number of different ways. I know we're talking about insurance right now, but there are a number of different aspects of your holistic financial life and holistic financial planning that one needs to be aware of and informed about. And so I think that's a good thing, that it's sort of put it out there in the open. And that presents an opportunity, again, for those of us in the financial services industry to figure out from our perch, from where we sit and from the places and spaces where we play in, how we can help to better inform those consumers who are hungry for this knowledge and information. And so I think that was a surprising statistic, but also a silver lining in that it presents an opportunity for those of us in this industry.
Yeah, the online courses was a part, which was one that I'm like, oh, okay, interesting. We can totally build more of that, right? And for people to take advantage of, and they start in social media, but they want to go into a more trusted, credible source. So allowing the bridge for that. What about you, Michael?
Yeah, I don't know if it's so much surprising, but I think that one of the best call outs that was made was not just the survey data around data sharing, but maybe more importantly, the point Marisa drove home around value exchange and how Americans in particular are incented by value exchange. I had a conversation with a client recently who asked me to scan one of their products, and it was a financial health product, and give them some feedback on what I was seeing. And what I provided them as some guidance was it was very clear what their business strategy was. They wanted me to upgrade. They wanted me to enter more data. They wanted me to adopt more of these services and take this path towards a paid subscription. What wasn't clear to me in any of those experiences was the value that I got out of it. And so I think what often gets lost in data sometimes is just what the consumer really needs and what's going to create an engaging experience for consumers, where they're going to build the trust, which is so integral to having a truly intimate financial health relationship with different service providers and financial services. And so I think the key message there is really, it's easy to think about our business objectives sometimes and lose sight of value exchange for user needs. And sometimes we even get data that says, well, that people are adopting this, people are doing it, but that's not necessarily providing long-term value and sustainable relationships around financial health. And so, again, I think that's the conversations that we're looking to have is how do you put the user at the center, find things that are both beneficial for you and your business objectives, but really give a value, provide some sort of reward, something that's actually of meaning back to that end customer. And then through that, you create that engagement loop where you can then have the trust to ask for more data as long as you're continuing to drip value throughout that life cycle.
Yeah. And also for them to come to you when there is an opportunity for there to be like a planning or, some sort of estate thing, like that makes sense as well. So I completely agree with you on kind of the consumer, the value, the customer lifetime value of the person and the customer lifetime value for the person. I feel like the two are in a traditionally pretty transactional and disintermediated industries like insurance or finances, that the two don't necessarily overlap as a Venn diagram. So that brings me kind of to the third body of questions, which is around the gap, the big gaps between the two. And I also want to caveat that in the overall data that we see, it's actually not the population overall. We see very many different cohorts of users depending on age, geography, like even different zip codes and urban versus suburban, things like that. So it's not really, definitely not one size fit all. It has to have it needs to be sophisticated, yet simple as an overall framework. So Marisa, maybe I'll start with you because you're probably looking at it from a very similar perspective to me.
Yeah, it's a bit overwhelming when you think about personalization because there's so much that can be done, but it's a lot to manage. The great thing is more and more technologies are entering the market that can help us manage this and do it well, and also to measure it, right? Because I think there's a line there when it comes to personalization, that there's certain things that are valuable with personalization and then other things that maybe aren't as valuable, right? And sometimes it's just like the same amount of effort for something that's not really going to get you the same return. So I think with personalization, it's this, like a lot of things digitally, it's a testing and learning process, right? Like when I make these enhancements, when I add this level of personalization, how much more engagement am I getting out of it, right? Because like I said, when it comes to education and now you're adding in the personalization level to it, it's a lot of work, and you want to make sure that your effort is generating the return that you desire for it. So, test and learn, see what's working, continue to tweak it, adjust it. I don't think out of the gate you have to have everything entirely personalized. Maybe you start with like a few sub-segments, categories, and then see if there's differences in them, split them out even further. But from day one, I don't think you need to have everything entirely personalized to the person, right? The other thing too is learn about them before you assume you know them, because this I think is often a mistake too at personalization. From the beginning, you want to personalize everything, but you don't yet really fully understand them. Start with some basic personalization, learn more about them, and then advance it over time. Then you're going to have a better result versus trying to guess and personalize everything from the very beginning. That's my
Yeah.
experience, at least.
Yeah. And it's our also recommendation to start with 3 to 5 key personas of customer. I see you nodding, Michael, so I'm going to swing over to you to how you would look at the gaps and addressing them and how you approach different cohorts.
Yeah, I think one of the things, just to pile on to what Marisa was saying there, is, you got to know what your strategic advantages are and where you're ready to meet the market. I find a lot of clients that want to go after it all and feel like they can go after it all, and they want to go after it in large investment chunks. And you reference Silicon Valley, like the books all say, don't do any of that, right? Like pick a small group that you're strategically positioned and have advantages, pick something small, test and iterate, learn, continue to grow, and then expand to the next and expand to the next. And so, I think that's the mindset that we're frequently advocating for our clients to adopt is, really do think about your business model, really think about the engagement that you have that's unique and where the signals are coming into something like Pia's mentioning, and where is there potential for you to advise it? Are you more mass market? Are you more affluent? Do you have more generational influence? Pick a place where you feel confident that you can get win and value, and get that win and value in a smaller investment, so that you can not only return that to your investors or your balance sheet, but you can also then build atop of it and then learn from that experience rather than a big bang rollout that takes many years and many millions to get to. So I think that's usually the biggest thing, is just trying to figure out how to decompose. It's a really difficult thing to talk multi-channel and omni-channel. There's a lot of exhaustion even now, 10, 15 years of that conversation going on. But pick a basic channel that'll work, test, learn, and then figure out how to expand it into your others. And so I think it's all about the decomposition, strategic advantage, picking the personas as you're calling it, and getting things in market faster to get those learnings.
Yeah. And I think that's something that actually MassMutual is doing pretty well with the test and learn and different things like that. So Pia, please share a little bit about the experimentation. I think that's really good. And then also maybe touch about on the gaps that you see between.
Yeah, that's sort of my team as a test and learn team, right? So we support other teams in trying to figure out, again, ways that we can better engage, reach, and serve different consumers that we don't reach today. And so testing and learning is the methodology that we deploy in order to figure that out. Again, you can't boil the ocean. You have to pick your lane. And so we've segmented the market, right? And so we're looking at who are the most underserved consumers. They are women, they are the Black market and the Hispanic market, right? And even within that, we can't pick all three of those. So we're going to focus on women, for example. Within women, we're going to do some data collection, some research to understand the psychographic profiles of different women, right? Because women are not a monolith. No one is, right? No population is. And so it really is about developing that a truly consumer-centric focused and process and approach to your work, really understanding the consumers, the population within those consumers. As you mentioned, Jane, picking a few personas and then testing out some things with those personas, right? And so that's what we've done in the past. We've tested out different, for example, marketing messages to sort of see what most resonates with women, which set of women, which group of women, what most resonates with men. We do the same thing with Gen Zers, Millennials, baby boomers, Gen Xers. And so from there, you can learn different things and you can sort of iterate on those, that collateral, those assets you've developed, and hopefully scale it. Right now our focus is on our worksite business, right? And so we don't have as much control to try to target specific personas or populations. You get whatever is at the employer's worksite, which is typically a cross spectrum of American consumers. But even within that, we're finding different levers that we can push and pull on to see sort of what works best here, what will increase or improve engagement. And if that works, we're going to double down on that. If it doesn't work, we're going to look at it, reassess it, and tweak it. right? And so that's what it's about. It's about taking those smaller steps, not trying to build everything from A to Z at the onset, but sort of going from A to B to C to D to E and continuing to build and grow in that manner. And so that's what we're doing as a mass markets team, and really hoping that at the end of the day, we can add tremendous longer term value for our organization.
I think you're for sure well on your way to doing that. So thank you so much for all of you for sharing your specific perspectives on it. I'm going to take the moment to kind of summarize the takeaways from what I heard here. I think the first one is that understanding financial health from the different generational perspectives is probably pretty important in how they interact with each other. So different cohorts, different understanding, and building things for key personas is probably the right approach to not boil the ocean. The second one is prioritizing joyful ways to deliver the financial content to empower newer generations to achieve better engagement so that they can stay with it and not be transactional. And the last one is that I'm hearing that the biggest opportunity really lies in multi-channel engagement and personalized health solutions, thinking about what just, of course, the business value is there, but what's in it really for the consumer, for the user, and so that they can experience it through the first interaction, but all the way through all the interactions over a period of time. So thank you so much for doing that. We are going to be also launching 2 additional webinars. So letting people know that there is a tech update for all the advisors that work with us are in our corporate wellness strategy and practice. Jennifer Leah, our total VP of Health and Wellness, will be hosting 3 of our advisory partners to talk about how this technology update will be useful for all the advisors. This is July 23rd. And then double clicking on more in financial health, we have an upcoming webinar around retirement planning. So we just talked about the different cohorts is different. How this cohort is thinking about their physical health and financial health is quite different. I'll be hosting 3 additional guests on their retirement solutions and what they're seeing in the market with actually quite different types of psychological personas, which is really fascinating. So again, not a one-size-fits-all type of approach. Overall, if you guys have additional questions, I know that we're on the last minute or so of the webinar. I wanted to take the moment to again thank the super knowledgeable and also executional panelists that we have here. And if you have questions, we're receiving some questions through the chat channel, so we will be able to get back to everyone, and you will be receiving a copy of the recording following probably tomorrow. Thanks to you all, and have a great, healthy day.